What if I told you millions of Americans could soon pay zero taxes on tips, overtime, and even Social Security? Sounds impossible, right? Well, it's officially on the table, and it could change everything. Stay tuned as we break down what you need to know. Hello, everyone. Recent discussions in Washington have brought forward a significant proposal regarding federal taxes on tipped wages, overtime pay, and Social Security benefits. This potential policy change could affect millions of American workers and retirees. Under current tax law, tipped employees must pay income tax on all reported tips, whether received in cash or through credit card payments. Overtime earnings are taxed at the same rate as regular wages. For Social Security recipients, benefits may become taxable if they have additional income above certain thresholds. These policies have been standard practice for many years. The proposed changes would modify this system in three important ways. First, all tips would become exempt from federal income tax. Second, overtime pay would no longer face additional taxation. Third, Social Security benefits would no longer be subject to federal income tax, regardless of other income sources. Supporters believe these changes would increase take-home pay for service industry workers and retirees, while critics have raised questions about the potential impact on government revenue. To address concerns about lost tax revenue, the proposal includes adjustments to the top marginal tax rate. Individuals earning over $609,350 annually would see their rate increase from 37% to 39.6%. This change would affect about 1% of taxpayers, who currently contribute approximately 40% of all federal income tax revenue. Economic analysts have identified several potential effects of these changes. The service industry might see improved wages for tipped employees. Workers could benefit from more valuable overtime pay without tax penalties. Retirees might gain an additional $200 to $500 per month from untaxed Social Security benefits. However, the long-term viability of these changes would depend on careful budget management. The legislative process for these changes is complex. The proposal may use a budget reconciliation process, which would allow passage with a simple majority of 51 votes in the Senate. The Senate parliamentarian will need to determine if the proposal meets reconciliation requirements. If no action is taken by December 2025, provisions from the 2017 Tax Cuts and Jobs Act will expire, potentially leading to tax increases across all brackets. Tax policy changes can have wide-reaching effects on individuals and the economy. As this proposal develops, taxpayers should consult official sources like the IRS and Congressional Budget Office for accurate, up-to-date information. Understanding these potential changes can help individuals make informed financial decisions. Thanks for tuning in. If this video helped you or sparked some questions, please share your thoughts in the comments below. Don't forget to like, share, and subscribe for more updates, and we'll see you next video.